Welcome back. Joining us now is Kunal Shah. He's Head Commodities and Currencies, and Nirmal Bang joins us live on the show. Kunal, hi. And I only want to talk about metals today because we are looking at very choppy moves onto this one. The first half saw record highs. The second half has seen immense profit taking coming in. Something like an aluminum, which hit an all-time high at $4,000 per ton, is just about holding 2,400 right now. I'll start with that metal. With the kind of curbs that we've seen in production in Europe and in China as well, how are you looking at the fundamentals and price view going forward?
Okay, so a fundamental consists of two parts. One is macro and another is micro. The macro part doesn't look very lucrative. That we've seen that the reopened trade of China has basically led to the upside in metals, maybe any metal. So whatever upside we have seen right now is with the expectation that there's going to be a reopening of Chinese economy and the demand of the metals is going to shoot up. That is the micro part. But the macro part here is the globally, with the rising interest rate and the tightening of the monetary policy and with the QT, I think the upside is very limited in all metals, irrespective of China opens up or not. The fact remains is that the tighter monetary policy is definitely going to weigh on metals. We are seeing this upside partly also because of the dollar index has corrected from 114 to 103, 104. But from these levels, I'm not expecting dollar index to crash. Looking at the way the US data, so right now we are in that irrational exuberance where with every positive data coming from US, Europe, markets are going to react negatively. And with every negative data coming out of there, we are going to see metals going positively. So at this point, I'm expecting, the upside is going to be capped from the micro perspective. And even though China is opening up, I don't see any major uptick in the metals prices from here. We have already seen that that has been discounted. And once China opens up, the production side also will get stronger going forward. So I'm not expecting major upside. The fundamental continues to remain grim. And I'm expecting with the housing market across the world expected to cool off in next 3 to 4 months, we are going to see the metal demand is going to gradually go down. So irrespective of the spike, what we are seeing right now, the fundamentals are not looking great. And we are going to see metal prices gradually, aluminum too, will gradually go down, copper too will gradually go down. All the metals are going to go down in next 1 or 2 months.
Kunal, I was reading a lot of global banks and brokerages report. I mean, I agree with you. Not everybody is bullish in all of these metals. Clearly not steel, not nickel, not even aluminum for that matter. But there are quite bullish statements coming in for iron ore and copper. Even now, for copper essentially, I mean, we're not too far away from all-time highs here, not too close either. 10,800 and we've seen 7,000 and now we're holding around 82, 8,500 thereabouts. What's your sense here? What kind of ranges are you working with?
Okay, so like you said, it's all about the China's reopening of the economy. Remember the fact that even though China opens up, the construction activity cannot reach to a level what we used to see in 2020, 2021 or 2022 for that matter, the first half. The reality is that the property sector, which accounts for the 25% of the Chinese GDP, is continuously under the pressure. No matter how much China comes up with the stimulus, this sector is not going to revive significantly. I think the range is what I'm expecting. LME copper should not go above, $9,000. When you talk about even iron ore, steel, right now, because of opening up, they are moving up. But I think gradually, after January, you are going to see some more, weakness coming into these markets also. So I'm not expecting any major upside in steel, iron ore, any of these commodities. It's a complete contra view in line with the consensus view. But that is what the fundamental and the macro outlook of the global economy stands at right now. The moment Western central banks give an indication that they are going to change or halt their tighter monetary policy, at that time, dollar will collapse and all these metals will rally. I think we are still 1 or 2 months or perhaps 3 months away from that situation because the labor market in US, in Europe remains quite tight and the labor-related, wage-related inflation is not going to go away in next 2-3 months. Okay. And hence, I'm of the view that the downside in the dollar is limited and we are going to see some pain in next 2-3 months and perhaps that will be followed by a gain. So perhaps after the second quarter of 2023, we will see a rally. We will have to bear some pain for next 2-3 months.
Okay.
Okay, all right, Kunal as well as Manisha, thanks very much for joining in and wish you all a very happy Merry Christmas as well as a Happy New Year holiday season, Kunal. Well, for the markets, it's turning out to be a tough session as of now, so there's no real reprieve, no real buying on dips which has taken place. The mid-cap index still down over 800 points as we speak. We have the Bank Nifty, which is down close to 600 points as well, down around 1.4%. Now, in terms of the top Nifty losers, it is the Adani stocks, Adani Ports, as well as Adani Enterprises, separately Hindalco as well as Tata Motors. So it is sectorally agnostic in terms of the losses that we are seeing. On the upside, there are a couple of these defensive plays which are managing to hold their head above the water. Divi's Labs, Kotak has managed to actually build up a little bit in terms of gains just in the past couple of minutes at the high point of the day for Kotak, up around 0.3%. Well, as we wrap up on the show, we leave you with some global opinion coming in from Jahangir Aziz of JP Morgan on how the revision in Q3 GDP weighed down on the US markets and how China's growth picture looks going forward.
What drove the market down today?